The reason why this is so important, and especially if you're using smart money concepts, is that institutions, they are exchanging with each other. There is a counterparty to this much volume. Retail volume is actually quite low. It doesn't necessarily move price, especially in the FX market. The majority of the volume comes from institutions. Now, not all smart money is smart. Not all institutions are smart money. In fact, there are plenty of hedge funds that are losing money. And so there is always some liquidity available. Not all smart money is actually making money. Welcome back to the CTI YouTube channel. In this video, I'm going to go over market structure using smart money concepts in order to greatly enhance the probabilities of whatever strategy you are using. So if you have a strategy and you want to improve your win rate, then follow these tips. I'm going to go through 4 parts for this particular series. So in the next few weeks, I'm going to be posting each video for you to learn from. So make sure that you got a notepad ready, because I'm going to be sharing some really good nuggets on smart money concepts. And if you're interested in a CMC program and a strategy and a mentorship, then here at CTI, we offer the bank level trading program, which is a strategy that was engineered by myself and Diego at a London hedge fund. And we combine smart money concepts, Wyckoff and wave theory with a pattern refinement technique in order to filter out high probability setups against those low probability setups. So if you're interested in that, then use the link in the description to find out more information. Now, before we get started on the video, make sure that you hit the like button, subscribe and share this video because it's full of nuggets. Share it with a trader that really needs to hear it. Let's get on with it. Price action is a language. In order to understand price action, in order to understand the language, you need to first of all understand what the context is of the conversation that's happening. See it like a language. And in order to decipher it, you need to think about the context behind it. What is price action telling you? What is smart money telling you? What is the narrative of the market right now? And so these are questions that will help you understand what price action is telling you. Another way to think about and trying to decipher what the context is to look at the past, the present, and the future intention that smart money, the story that they're telling with price action. What are their future intentions? And so we can do this with the chart right in front of us. We don't need any special indicators. All we need is price action to tell you what smart money has done, what they're currently doing, and what they intend to do. These videos are going to go through market structure, but looking at institutional concepts, smart money concepts. What I'm going to go through now is essentially going to increase the probability and actually improve your forecasting. And so this will all, of course, improve your performance. So let's go into the charts and let's find out what the market narrative is. And we can do this using market structure. So I've got a basic box rectangle tool here on TradingView, and we're looking at the euro. We're on rewind at the moment. So we're looking at data from February 2019 up to November 2020. So as you know, these were the Rona lows, and this was a really crazy time to be trading, to be honest. I've never traded through a pandemic, so this was obviously the first for myself and many other traders. We had an idea as to what was happening during this period from a macro perspective, from the fundamentals of what was going on. But when we're studying price action, all we need to do is just follow the trend. Okay, so as you can see on the left hand side of the chart, we are clearly on a downtrend. So we are making lower lows and lower highs. If we look at this particular lower low, once it was breached, we then draw a simple box and we now have the lower high and the lower low. This is the significant high and the significant low. So everything that happens within this range, any price action that occurs or any sort of correction that occurs here is just that, a correction. So because the trend is down. And so when this lower low gets broken, we then keep it moving. We keep it moving. We have a new high, but then it doesn't last very long. It gets mitigated right there. So then we just keep following it around. at this point of time, if we were to do this, we can just continue to follow it around. Let's zoom in and let's speed it up a little bit. So we keep following it around. So we got a new high up here. This lower low gets broken, and so we continue. So this is such a simple thing to do. If you do have TradingView, practice this and you will start to see the market narrative in a bit more of a simple format. So continue the story. Okay, so this, we're still moving down. Oh wait, something has happened. We've continued to move lower. There are these short bursts of breaker structures to the upside, and so the trend does shift. So we went from making lower lows to lower highs to suddenly this high, this range was breached, and so we have a new trend. And so we can start following it higher until it gets breached. We had a clear breaker structure up here, so then we start to map it out. We find the higher low and the new significant higher high. But then what happens? It breaches, and so then we're back in the downtrend. And this is on the daily time frame, okay? So I'll be touching more in the next video, going into multiple time frames, because within every time frame there are different trends. What this small correction might be on the daily, it could be a strong trend on the 5 minute. And so it's all relative to what time frame you're looking at. What we're doing right now is we're just following the trend on one time frame. The reason why this is so important, and especially if you're using smart money concepts, is that institutions, they are exchanging with each other. There is a counterparty to this much volume. Retail volume is actually quite low. It doesn't necessarily move price, especially in the FX market. The majority of the volume comes from institutions. Now, not all smart money is smart. Not all institutions are smart money. In fact, there are plenty of hedge funds that are losing money. And so there is always some liquidity available. Not all smart money is actually making money. There are some institutions that are in fact not necessarily profiting from the exchange that is happening between, let's say, the euro and the dollar. This may be a conglomerate. It may just be a commercial company that is exchanging revenues from the euro back into the dollar. They might be an exporter or an importer from Europe to the US. And so they are exchanging constantly between the euro and the dollar. They are providing counterparty risk and counter liquidity. They're providing liquidity for hedge funds to actually make a profit. If you want to find out more about this, you can actually have a look at the CLT report. You can actually clearly see visually what the commercials are doing. Generally, when prices are moving higher, so we're looking at the Euro USD, this is the same chart that we're looking at. In fact, we're looking at this part of the data. As you can see, as price is moving higher, you can see that commercials, so these are commercial consisting of producers, merchants, processors, users, and swap dealers. They are net short. So anything below the zero are net short, even though prices are moving higher. Whereas the green, these are non-commercials or large speculators consistent of managed money and other reportables. So these are asset managers, institutional asset managers. They went from net short to net long. And as you can see, this is smart money. These are the institutions who we want to trade in line with. We don't want to trade against these guys because these are informed traders, informed money. And that's why we refer to them as smart money, and Wyckofians will refer to them as the composite man, okay? And so going back to the chart here,